Welcome to this week's look at the state of the New York City real estate market. This is for the week of May 20th to May 26th. So happy Memorial Day, everybody. And as you can probably tell by my background and probably a little bit by the way I look, my hair in particular, you can imagine that I am not in my usual setting, but I am going to bring you the very latest news, as I always do, about the New York City real estate market, because the market is changing and I didn't want to miss a week. So here goes. We're going to start, as we always do, with the luxury market. There were 30 contracts signed for properties priced at $4 million and above, and that is the same as it was last week, which is really kind of remarkable. I'm going to get into the details of that in a minute, but I do want to say that this is pretty impressive. This beats the 10-year average. Going into the week preceding Memorial Day, this 30 contract signed beats the 27 contract signed record. Anyway, we're going to get into all the details about the luxury market when I wrap this all up. The number one contract that was signed last week was a townhouse at 53 East 77th Street. It was asking $26 million and it was listed in October. This 34-foot wide, 6-story Georgian house is commercially zoned and has 14,500 square feet. The previous owners of this house have included publisher Funk and Wagnalls to Cello, a sound system business. The current sellers are antique furniture dealers. Purchased the house for $17,350,000 in 2007. This is a pretty impressive property and really excited to see what the new owners are going to do with it. The number two contract was apartment 1516 at 515 Park Avenue. It was asking $25 million and it has been on and off the market since 2018, starting at over $39 million. The duplex condo has 6,514 square feet, includes 6 bedrooms, 4 bathrooms, 2 powder rooms. It also includes a wine cellar and 3H, which is a studio apartment. The 15th floor entertaining space features a 29 by 29 foot living room with a fireplace, formal dining room, breakfast room, library, billiards room. All of these rooms are surrounded by a terrace overlooking Park Avenue. Wow. Upstairs, a 30-foot master bedroom, 4 other bedrooms, and a media theater room. The sellers paid $21 million back in 2006. The amenities in the building include doormen and a gym. Total weekly asking price sales volume for last week, $276,845,000. Average asking price, $9,228,167. Median asking price, $6,097,500. Average discount from original ask to last asking price, 16%. Average days on the market, 891. We're going to move now and talk about what's going on in Manhattan and Brooklyn. As I said, this market is changing. We are kind of heading into the end of this spring market, and we are seeing signs of change. So stick around till the end of this report. Any questions about the luxury market, please reach out to me directly at Sotheby's or post those questions below. We're going to take a look now at what happened last week in Manhattan. The supply in Manhattan fell almost 45%. 246 properties, new properties, came on the market for the week. 230 contracts were signed, down just a fraction, less than 1%. Off-market properties also down about 2%. 152 properties came off the market. If we look at the supply for the month, we see the supply is kind of falling a bit, down almost 19%. 1,656 properties on the market in Manhattan. Contracts signed for the month, 949, down about 7%. Off-market properties, 591. That rose a little over 32%. If we look at this market pulse, down 2.7%, down 1.8% from last year, down 1.3% from last month. So we do see signs of change in Manhattan. We see this shifting from a neutral market into more of, let's call it, buyer's territory. This 30-day moving window of contracts signed, 949. This is also down 3.5% from last month and down over 16% from last year. We continue to be in this kind of neutral liquidity place, at least from a contract sign standpoint. I'll get into why that is when I give you my wrap up at the end of this report. But for now, I want to talk a little bit, as I have before, about this rolling 1-year renovation premium in Manhattan. If we look at the spread in Manhattan between renovated and unrenovated properties and the premium that buyers will pay for those renovated properties, it looks to be about 19% at this point. That is definitely a difference, but it has faded from where it had been during the pandemic, which was quite a lot higher. At one point, it was in the 30s. So that is very likely because people are feeling like they can get work done. The supply feels different now. So there are people to do the work now. The supply is available. They can get the things that they need to get to complete their work. So I think that it probably feels a lot better to buyers and probably feels a lot better to sellers. So again, this is for Manhattan. I thought this chart might be very helpful for both buyers and sellers to take a look at. Okay, that's it for Manhattan. Let's take a look now at what's happening in Brooklyn, because Brooklyn is a different story than Manhattan. Things are changing in Brooklyn too, but very different than Manhattan. The Brooklyn supply also fell a little over 40%. 148 new properties came on the market for the week. 144 contracts were signed, down 4%. Off market, 59 properties came off the market. That is down almost 5%. The supply for the month, 913, down 12%. Contract signed, 622, down 1%. Off market, up almost 24%, 271. If we look at this market pulse reading for Brooklyn, we see that it is rising. It's up almost 1%. It is still down 2.4% from last year, but nothing like it is in Manhattan. It is actually up 1.1%. From last month. We see that it is rising out of neutral territory, let's call it that, and it is starting to move up into a market that it looks to be starting to favor the sellers. The liquidity pace chart, this 30-day moving window of contracts signed, 622. That is up 3.2% from last month, down 17.5% from last year, but still nice to see that little bit of a pop in the last 30 days of contract activity, still showing this neutrality in the Brooklyn market. But as we saw in the market pulse chart, it does look like there is, on balance, less supply than there is demand, and that is starting to look good to the sellers. This look at the Brooklyn market pulse suggests that the market is in a better place now than it has been in many months. So sellers, you should be trying to take advantage of this. That is it for Brooklyn. Now I'm going to shift over. I'm going to sum this up, get into more details about really what is going on here, and if you are an active buyer or seller, what you should be doing to ensure your success. Any questions, please post those below or reach out to me directly at Sotheby's. So there were 30 contracts signed at $4 million and above, and that is the same as last week. Very impressive. We broke a record for the week going into Memorial Day. The previous record was 27 contracts signed, so that's great news. 9 of those contracts that were signed were in the trophy category, meaning those were properties that were priced at $10 million and above. And for those who are counting, 12 of those properties were for new development or sponsor sales. 19 condos sold, 9 co-ops, and 2 townhouses. Most of the properties were uptown. 20 of them were uptown and 10 were downtown. So again, luxury market continues to really dominate. These are mostly cash transactions, and so those buyers are really unaffected by the interest rates. And if they see something and they see a good opportunity, they're going to make a move on it, and they really don't care about what's going on in the mortgage interest rates world. we'll see. Hopefully that will just continue, and that would be wonderful. All right, so Manhattan, Brooklyn, mere mortals. This is a different story. What we're seeing is that both continue to be in neutral territory. However, they are both different. Meaning, in Manhattan, we are seeing a market that is shifting. We are seeing perhaps pullback in inventory in both Manhattan and Brooklyn, but less demand in Manhattan, more demand in Brooklyn. So that's starting to change the market pulse in both of these markets. We're starting to see that in Manhattan, while we're in technically a neutral market, seem to be more to the advantage of buyers now, at least as of the moment. For Brooklyn, it looks to be just the opposite. In both Brooklyn and in Manhattan, we are seeing a decline in new inventory. To a certain extent, we would be expecting that this time of year. Probably the main difference that we are seeing is demand. And so in Manhattan, there is less demand than there seems to be in Brooklyn. And so the market pulse in both of those markets is beginning to shift. As I have been saying, now that we are almost at the very end of May, we probably have a few weeks left of the spring market, although there have been years when we have gone quite far into June. So this market could surprise us and we could continue right along, and we'll go right on into June. Just have to keep an eye on this. This little pop in activity in Brooklyn could be an indicator of that. However, it's just really not enough data to predict fully. So if you are in the market currently and you are a buyer or seller, what should you be doing to ensure your success? If you are a seller, be aware that this premium for renovated properties is about 19%, and that is better than it was, but it is still a premium. And if you have a renovated property, great. If you do not, then you should be aware of that, and that should be reflected in your asking price, or you may find that you're struggling to attract the buyers and the offers that you want to be getting. If you are in Manhattan and you are a seller, you may be finding that you are just struggling a little more to attract buyers, period, because it seems that buyers have just pulled back maybe a little weensy bit. If you are in Brooklyn and you are a seller, you may be finding this to be a very, very good market for you. And if you're not, then it is most surely your price, because you can see from the data that buyers are really absorbing the inventory almost as soon as it comes on, as long as it is well priced. So if you are a Brooklyn seller and you have a property on the market, you should be expecting it to move quickly, meaning in the first few weeks. And if it's not, then be sure that you're addressing your price sooner rather than later so you don't miss this market, because it's a pretty good one for Brooklyn sellers. And for Manhattan sellers, it's not a bad one either. Don't mean to suggest that. However, it is a little more price sensitive, perhaps, for you. And perhaps you have a little more competition to attract those buyers. If you are a buyer in Manhattan, you probably have a little more play, a little more leverage, depending on the circumstance. If you are a buyer in Brooklyn, you may find that you have less leverage. And especially if a property has just come on the market, you may find that you have a lot more competition. You may be a little tougher going for you. The only other thing I will say is that with the slowdown of new inventory coming on the market, this may be it. Don't expect, could just be now a little, like a trickle of new inventory between now and the fall. Don't expect a huge amount of new inventory. So if you see something you like, you might want to make a move on it. Don't wait around for thinking that there's going to be a lot more, unless you want to wait until September. That is it for this week's look at the state of the New York City real estate market. Thank you for bearing with me and this little transitional new environment. I'll be back next week in my usual place. Any questions, please post them below. As always, my thanks to the Olshan Luxury Report and Urban Digs. The work that they do helps me to help you to make great decisions. As I said, I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.